Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Deven Choksey from DR Choksey Finserv joins us on the show. Hi, Deven. Good morning and good to see you win. Yesterday's fall was a little bit scary. I was reading a couple of articles which suggest that could be a bit of a liquidity crunch domestically with retail participants that could have caused that. So if that's the case, we'll have to see whether or not we bounce back in today's trading session. But let's address a couple of stocks. BSE came out with its set of numbers. The stock had a one-way rally and from the recent peak, it's corrected. What's your view on the stock at current prices?
Good morning. I think the BSE numbers appears to be, I think, more stronger, more because of significant amount of cost savings that they have done in their operations. It basically gets reflected into the OPEX, I think, numbers which have been reported by the company. So that is definitely a positive thing. Whether it is sustainable, not completely sure. But as it stands today, I think probably they will have a little bit challenging time, largely because of the volumes which are getting affected because of the new derivative regulations. At the same time, overall condition in the market is also looking a little bit weak now compared to what it was in the previous 6 months. So certainly, I think coming quarter as well as I think till the year end, we are likely to see some part of the challenging environment as far as the exchange business are concerned. But nonetheless, if they sustain the lower operating costs, probably I think they should be in a position to maintain the profits in the profit margin going forward as well.
Right. Deven, while we've seen a lot of these companies getting pummeled for bad results, we've also seen a lot of them be handsomely rewarded for decent results as well. Case in point, something like Jubilant FoodWorks, which was among the top gainers in yesterday's trading session. We did see some traction come by in a lot of these other names which outperformed as well. In light of that, we have numbers likely from Honasa today. And from going by what the management has been telling us, they will outgrow the industry. And we got Nykaa as well, with a 24% revenue growth at a time when you are seeing weakness in the entire sector. Do you like any of these new age players here?
Mangalam, I think the companies and the business model definitely they are really, really good. I think they are appealing. However, I think what is challenging as far as the market environment is concerned, that the valuations are not cheap. Probably even though the prices have corrected in some of the new age companies, they're still quoting at a premium valuation and there is no margin of safety left in that valuation. So my concern is unless we get the sufficient amount of protection as far as I think the downside is concerned, I think the even good business model buying it a wrong valuation will probably remain underperformance in the portfolio of the investor. So that's where we are a little bit more concerned. In fact, I think we have been hearing this particular concern for last few quarters, wherein we believe that, even today also we believe that the valuations, if they are not justified with the growth of the company, probably I think you are going to get underperformance in your portfolio. And that's where I think we remain concerned about. Nothing to do with the business. Business is remain absolutely convincing as I see it from the investment point of view.
Got it. By the way, Deven, morning, Prashant here. There's an NTPC sort of press conference on their NTPC Green IPO, which is forthcoming. It's going to be another large one, right? It just got done with one large, the Swiggy one, which of course lists today, and NTPC Green is next. Any thoughts on this one and any implications for people who are looking at it? Should one buy NTPC in anticipation? What's your sense?
100%. Good morning. I think it's a long investment call actually. I think if one is looking into this particular company. In my understanding on the subject is that I think any such projects I think which are getting implemented, they will probably take 5 to 6 years to show actual performance going forward. Of course, NTPC Green is an existing one, but at the same time, the amount of investment that they are making versus the kind of growth that we are talking about, it's not going to be a near-term game. It's going to be a long-term game. So those who are investing for the long-term, likes of insurance companies, likes of some of the long-only mutual funds, they may probably find it meaningful to buy into this particular IPO. But those investors who are typically the flippers, I think they will find it a little difficult to make money out of this kind of proposition as we see. Nothing to do with the fundamentals of the business. These fundamentals remain as strong. However, I think as I said, it will take time to deliver. And that's where probably I think we'll have to have a lot of patience buying this kind of company in your portfolio and stay invested for a longer period of time.
All right, Deven, today we're going to have a big listing, Swiggy. It's going to be giving Zomato company on the Indian bourses. Your view on that particular name, and what about Zomato? Zomato saw a fair bit of action in the run-up to this particular issue, and they seem to be moving in the right direction as well. Tremendous space for these companies, in terms of services. But what about the stock price?
Yeah, that's again, I think, a good question, because I think on one side, we are fully convinced about, I think, the prospects in the food delivery business, in the dining out business, in the quick commerce business of Zomato, Swiggy, both put together. And the kind of verticals that they've been implementing one after another, I think they also suggest that they will be able to engage the customer for a good long term with, I think, different properties that they have got themselves into. So there is no challenge on that particular front. The major challenge remains as to how to make money out of these kind of businesses, because you already have many things factored into the price, and as a result of it, the valuation remains scaled up. Even Swiggy, which is getting listed today, I believe that I think everything is fully priced into the valuation today. And that's where probably I think one would like to wait and see whether we'll make entry at a decent price at a lower price. To my mind, I think the business remains absolutely convincing. Maybe at the right price, one could get into this kind of stocks for long-term investment.
That exactly will be the most important thing to track. Just three things to track for Swiggy's IPO. I'll spare you all the financial details, etc. The first part, 11,300 crore IPO wasn't subscribed fairly well. So just 3.5 times. And with the market mood, chances are that it opens at a discount to its issue price. The second question comes in then. Like Deven also pointed out, we know the business models of both the companies. And we know that Zomato, from a business standpoint, is a little better than Swiggy. So at what level of discount does the Swiggy price settle in versus Zomato? And then the third point, does the company walk the talk? They have been talking about increasing their quick commerce stores, and they have been talking about, improving their food delivery margins. Does that happen or not is something that we'll be tracking on the Swiggy IPO. Take a short break, come back on the other side. We have Mitesh Thakkar.